Hello, welcome back. This is Seewing Yee, and today's video will be very interesting. Before I will share my screen, please click the like and subscribe button at the end of this video if you see value in this presentation, because I'm trying to build up my YouTube subscriber channel. So without further ado, the title of my presentation today is Crash Bros. All the crash videos that you've been seeing out there. Anyway, yeah, YouTube channel is something else. Is the wild west of media, news media reporting. Anyway, Crash Bros exposed. Crash Bros videos exposed. Real estate bubble is fake news. What do I mean by that? You can find out. Here we go. All right, here is Economics 101. Economics 101 means if the pent-up demand is greater than the supply of homes, then it will put upward pressures on home prices. And today, as I recorded this video, June 27th, 2023, it applies to today's housing environment. Supply and demand. That's Economic 101. They teach you in the 9th grade. Did they not? Perhaps some of us need to get back into economic education where there are scarce resources and more people want it than there are supply. Then we have home prices increasing. So supply and demand, very fundamental of economics, and we all must learn about this. Anyway, U.S. home equity surged tremendously over the years as the value of housing stock passes 39 trillion with a T. Currently, you may or may not heard, sellers are locked in. The lock-in effect. They are not bulging. They are staying tight. They are in mortgage debtors prison in a good way. All right, in a good way. It's not your typical debtor's prison. No, I have coined the new term, mortgage debtor's prison, which is good. 9 out of 10 mortgages have an interest rate below 5%, and more than 40% of all homeowners don't even have a mortgage. Yeah, congratulations. You guys are sitting on a gold mine, and homeowners are staying longer at their homes, around the average of 13 years. As you can see, the ratio of home equity versus the mortgage debt outstanding is at a very good ratio. This means that a lot of people who own homes over the years, long term, and even those individuals who purchased primary homes in the past 3 years during the pandemic, and real estate investors, the people that I consult with, they have purchased investment properties in the past few years. You guys have done extremely well short term, but you guys are staying in for the long haul. So good for you. It's all about buy and hold real estate for the long term. And history clearly indicates that's how you build wealth. I'm not going to go over the precise details. We are looking at these slides, go over the percentages of homeowners that have the applicable amazing mortgage rate, historical mortgage rate that people were able to take advantage of during the last few years, 2021 especially. All right. And this chart is just pretty much says it all. The homeowners, the mortgage holders, right now, the mortgage rate is in the high sixes, around 6.9% as we speak, per Mortgage News Daily as of today, 27th of June, 2023. And when most of these people have mortgages below 5%, they have no incentive or motivation to give up their current home with the historically low mortgage interest rate of around 4% or less to move up to buy a move up home, which is potentially more expensive today than before. And with a mortgage rate of almost 7%, they're essentially doubling their mortgage payment. So numerically, it does not make sense for any current mortgage homeowners to get rid of their historically low, amazing interest rate mortgages, all right? Until and unless in the foreseeable future, down the road, this year, next year, if the interest rate does not decrease below 6%, this is my estimation, most of these current homeowners, they will not sell. They will keep their mortgages for the next 28 years. So does that mean the next 28 years, because of a tremendous lack of supply of homes inventory, does that mean that we can continue to have a shortage of homes for sale? Probably, maybe. Would you agree, in my opinion, that if this scenario continue, if the current mortgage rate for the next few years are going to be between 6 and 7%, the seller's going to stay put. We're not going to have any increase in supply of inventory. And the new builders, are simply not making up the difference in terms of new constructions to offset the currently trending, historically low supply of inventory nationwide. Does that make sense? As you can see, around 40 million people have mortgage rates below 6%. That you see, 250,000 people have 30-year mortgage fixed rate below 2%. Wow, they are sitting on a gold mine. 4.7 million people have mortgage rate of between 2 and 2.5%. 13 million have mortgage rate below between 2.5 and 3%. 11 million people have mortgage rate between 3 and 3.5%. And 9.5 million people, mortgage holders, have mortgage rate between 3.5 and 4%. So here it is. And these people, this group of mortgage holders, they are dictating the housing market. So crash bros out there, when you have limited supply of inventory and the pent-up demand is still pretty high, given today's elevated mortgage rate, we still have this pent-up demand, and home prices will increase, and home prices have increased a month over month this year, 2023, which I will go over the data by Redfin momentarily, all right, in the subsequent slides. So these homeowners, they're sitting pretty. They have a very low mortgage payment. Imagine 40% of the homeowners right now in the nation do not have any debts, they are free and clear. They have no mortgages. So they are controlling, this category of people are controlling the housing market. So therefore, what real estate bubble, what real estate crash bros out there, eat your heart out. Altos Research generated a few days ago, June 23, 2023. And as you can see, we are at a very low supply of inventory, extremely low. However, the past couple of weeks, the more inventory has appeared, as you can see right here, this past few weeks in June. However, if you look at, I know the 2021 and the first part of 2022 last year is an anomaly. It's not even an apple-to-apple comparison, because during 2021, the mortgage rates were around 3%. So therefore, we have buying frenzy, multiple offers, bidding wars, and very limited supply of inventory, around a little bit over 1 month's supply of inventory during 2021 and part of the early part of 2022. Therefore, skyrocketing of home prices occur in many regions in the U.S. In the second half of last year, 2022, the mortgage rate, the Federal Reserve decided to cause the skyrocketing of a mortgage rate from 3, 4, 5% at the beginning of 2022, all the way around October of 2022, around 7.3%. This sudden shock of rising mortgage rates caught people off guard. As a result, the demand for homes has really plunged and causing some regions, the U.S. home prices, to decrease. Having said that, if you look at the current level of inventory, and it's trending down throughout this past year, 2023, with a slight uptick. Who knows what's in the future, the rest of the year going to hold. But if you compare to a very traditional historical supply of inventory. If you compare to the pre-pandemic, back in 2019, we have almost 1 million homes for sale. Right now, we barely have more than a little bit less than 500 homes for sale, trending toward a historical low of inventory. And the pent-up demand is still pretty high throughout the nation right now because there's almost no inventory and the demand for homes are still pretty high. We're seeing a little bit about bidding wars and multiple offers, 3 to 5 offers per house. And so home prices are being bid up by 5 to 10% over asking. So when a good home in a particular neighborhood, comes into the market, if those homes are turnkey, fixed up well, in a nice, and they are priced well, and they are in a good location, they get gobbled up pretty quickly within a week or less in many markets, especially those entry-level homes, a little bit below medium price in a particular market. Yep. So right now there's a lot of activities. The spring buying season is very robust. However, which is rare in that this past spring season, we have not seen any increases in new listings or active listings like you see in a typical strong spring buying season. It did not happen this year because of the lock-in effect. Most homeowners are not willing to sell due to the lock-in effect of their historically low interest rate. All right, so let's continue with the slideshow. And if you can see, not only pre-pandemic 2019, there were a whopping 1 million homes for sale. So right now we are around 50% below the normal level of supply of inventory are needed to have a healthy, balanced housing market. If you compare, go back in 2016, we have around 1.2 million of homes for sale. So just looking at the past, 7 years, we have continued decreasing supply of home inventory, and these trends are not good. We need more homes for sale. We need the Federal Reserve to continue to lower the mortgage rate so we could have more people that can afford to buy homes. Right now, we are at a 40-year home affordability situations. A lot of people are priced out of home ownership due to the skyrocketing of home prices in the past few years and the elevated mortgage interest rate of 6 to 7%. All right, so that's what we're seeing. Economics 101, with the pent-up demand are greater than the available supply, home prices will increase, and it has been increasing throughout this year, 2023, in virtually all the housing markets in the country. All right, so let's get back to let's go over Redfin data. The median price, as you can see, actually last year, there's so much negative news, so many crash bros out there creating this narrative of housing crash, home prices just dropping like flies and all that, and all these negative headlines, clickbait type of YouTubers out there so they can get subscribers and what have you. But those are very, very negative information. They are very misleading. They are very inaccurate. If you take a step back, look at the real data. The first half of 2022, we have seen double-digit increases in appreciation nationwide for the first 6 months of 2022. Then when the mortgage rate increased from 3, 4, 5% in the first half of 2022 to 6 and 7% toward the last 2 quarters of 2022, we have seen home prices drop 7 and 10%. A lot of these nationwide home prices dropped in the second half of last year, 2022, were mainly in the western region of the U.S., whereas the majority, the part of the Midwest and the Northeast and the South and Southeast, the home prices in the second half of 2022, for the most part, has held steady. It have not decreased. Many of the submarkets in the Midwest and South and Southeast, even throughout the second half of last year, the home prices in those specific local markets have increase in value. So real estate is local. There's no such thing as national real estate market, even though I'm going over essentially the big picture of the real estate housing data analysis. As you can see, the slight correction that occurred, the home prices decreases over the past 6 months of last year was more than made up for the robust housing transaction year to date in 2023. As you can see, we start off January 2023 with a median home price around $350K, and then there's a slight dip in February 2023. Since February of this year, for the past 4 months, home prices were increasing nationwide collectively to the tune of around 10% appreciation, double-digit appreciation, and then so it has caught up. So any kind of decreases in 2022 was more than offset, made up by the first 6 months of increasing home prices, rendering this past 12 to 18 months pretty much flat. We have a very slight dip year over year in home prices changes. All right. So again, this is, some of you may be surprised by this data, but these are conclusive data, are verified by Redfin and a few other major resources. And the demise of the housing market has been greatly exaggerated because you have these negative headlines that crash bros out there that are twisting the narrative. They are manipulating the data to make it appear that the housing prices are crashing in the past 12 to 18 months. That's not the case, as you can see the clear-cut data that I have just provided you. All right. And as I conclude this video, let's go through a couple of more important metrics as reported by Redfin year to date. The weekly supply, as you can see, dated June 18, 2023, the number of weeks of supply is 10.2 weeks, which is equate to 2.4 months supply of inventory. We are trending towards less and less supply of inventory. The healthy, balanced market are typically, you need about 5 to 6 months supply of inventory to create an equilibrium whereby demand equal supply. We're not seeing that. We have 2.4 months of supply of inventory dated June the 18th, as you can see, nationwide that is. However, in some local markets, such as the one in California, in the Bay Area where I live, in San Jose, in Oakland, for example, in San Francisco, the supply of inventory right now in June is around 1 month's supply inventory. Same thing with Southern California, same with Las Vegas, Phoenix, Boise, and few other boom and bust boomtown market in the past couple of years. They currently have a very low supply of inventory in those boom and bust small boomtown markets in the Western region. And those home prices in those cyclical markets, if you will, in a Western region, their home prices are bouncing back as we speak right now, believe it or not. So they are recovering from those slight price drop that occur in the second half of last year. However, the Midwest and South and Southeast and Northeast region of the U.S., we have seen year over year, month over month, steady increases in home prices. Go figure, right? As I conclude this video, let's do a couple more slides. And new listings, as you can see, is very low, 24% year over year, lower than the previous year. We are at 89,000 new homes, new listings nationwide, at below the last few years, way below. As you can see, back in 2020, 2019, the new listings year over year in June was around 120,000. This week, only have 89,000 active listings. No, that was the new, that was the new listings on a previous slide. Active listings, as you can see, is flat. Active listings right now, year over year nationwide, is 751,000 homes for sale. Active listing, way below the past few years and way below the pre-pandemic level of more than $1 million homes active listings. And there you go. Those are the pretty much the recap, my video presentation. To recap, the housing market demise has been greatly exaggerated, especially all the negative headlines out there by the crash bros. The housing bubble is fake news. Fake means it's not as bad as the negative media have painted out to be, because the news media, how they thrive is to report negative news. All the headlines, if you read deep into the headlines, you will see the actual correctness, what's really happening in the real estate market. So do not be too gullible. Do not believe everything you hear, especially those Crash Bros videos out there, and all those mainstream videos are just as guilty as the Crash Bros. They love to clickbait. They love more views. They love high subscription to monetize their channels for whoever they are. But that's how it is. Try to avoid those clickbait negative headlines. They are not accurate. They're very misleading. They just feed into the frenzy. The world is not coming to an end. There is no doom and gloom. The world is not melting. Okay. Real estate, the housing market is very resilient. We need to separate the facts versus the fiction. So I challenge all the potential primary home buyers out there. If you have a good financial situation, if you qualify to buy a house, please keep in mind that you can buy and hold for the long term, at least 7 to 10 years or longer. That way you can overcome any short-term market correction. And for real estate investors, in which that's what I do, there's never a wrong time to buy, as long as you buy in a right market, you buy in an affordable market that cash flows with good mortgage rates, and buy and hold for the long term. Real estate investors will thrive, not only short-term, but long-term as well. All right. So again, thanks for listening. Please, if you see value on this presentation, please smash the like button and subscribe to my YouTube channel. And also enter my website below you and drop your email so you become a free member of our real estate investment club, if you will. Once you join our free network, you will receive weekly emails in all aspects of real estate investing, education, and opportunities. What we do is we help mom and pop first-time investors and experienced investors, wherever you live in the country, to invest out of state. This is our specialty. We connect you with experienced network of real estate agents and who are experts in their specific markets in the country. Regardless of where you live, you have the ability to buy and invest remotely, passively, cash flow properties in the best areas in the country using a turnkey approach. Thank you so much. This is Seewing Yee. Thanks for listening. I appreciate you, and I'll see you in the next video shortly. Have a nice day. Bye-bye.